Hey everyone, Tesla reported quarterly earnings that sent the stock price soaring, but sales, profits, cash flow, everything was down. So, what's going on with Tesla stock? Why is the stock reacting this way? Well, let's dive into the details here in what CEO Elon Musk said that can explain a lot of the price action. So, let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Elon Musk saying in reference to the first quarter that in Q1 they navigated several unforeseen challenges as well as the ramp of the updated Model 3 in Fremont. And that's true. They experienced several unforeseen challenges. The attack in one of its manufacturing facilities, ramping up this new Model 3 in Fremont, ramping up the Cybertruck, macroeconomic circumstances, all of which impacted Tesla's performance. To make matters worse, EV adoption rate globally is under pressure, right? I've been talking about this for more than a year now. More than 9 out of 10 people are choosing internal combustion engine vehicles when they go out to buy a car. And that trend has worsened in recent months as supply of internal combustion engine vehicles have improved. In 2020 and 2021 and in 2022, supply chains hurt those legacy car manufacturers because they weren't able to produce as many cars as people wanted to buy. And so people looking around without internal combustion engine vehicles to buy chose electric vehicles more often than usual because that's what was available, not because they actually wanted an electric vehicle. They just wanted a car for transportation. And if that's what was available, that's what they were buying. But now in 2024, those supply chain constraints have eased. They're pretty much non existent now. And so, with availability of internal combustion engine vehicles, people are saying, oh, yeah, that's a no brainer. We'll choose that all the time. More than 9 out of 10 consumers are choosing that. It's more convenient, incredibly more convenient, and a lot less expensive when you consider the total cost of ownership as well, with higher insurance costs for EVs and lower insurance costs for legacy vehicles. And then on top of that, you get all of the benefits of the convenience of filling up gas in less than 2 or 3 minutes and driving as much as the car can go. But whereas EVs, it takes so much longer to charge, and then you've got to worry about how long it can take you before you need to charge again. So understandably so, the EV adoption rate globally is under pressure because of those fundamental aspects. And Tesla, being one of the larger EV companies in the world, of course, got the brunt of those pressure challenges in the recent quarter. So many of the manufacturers are now saying, well, if people don't want EVs, we don't want to be producing so many of these EVs. We'll just do the minimum that governments mandate us to do. And in the meanwhile, we'll work with government. We'll increase our lobbying efforts to try and convince government to pause or extend these mandates and regulations because customers aren't buying this. Why are you forcing us to make these vehicles that customers don't want to buy, right? Make customers want to buy it and then we'll produce it, right? I think the government may have went on the opposite direction here in terms of the mandates and the forcefulness of the mandates. Trillions of dollars being spent and not very much progress being made. So I think there needs to be a rethink there. Tesla saying that they believe it's not the right strategy and electric vehicles will ultimately dominate the market. That remains to be seen. I think recent trends have highlighted that difficulty, the challenge of making electric vehicles the dominant form of vehicles in the market. Maybe it's more of a hybrid future instead of an electric vehicle future. That's becoming more transparent. That's becoming more of a possibility now as the difficulties, the challenges of making an affordable electric vehicle combined with making the infrastructure is really highlighting the difficulty of this transition. Still, Tesla saying that their energy storage deployments of Megapack in particular reached an all-time high in Q1, leading to record profitability for the energy business, and that looks likely to continue to increase in the quarters and years ahead. That's great news for Tesla stock investors. That part of the business is thriving. It's growing. It's becoming more and more meaningful part of its business because the actual vehicle sales dropped in the quarter and then energy storage business increased, it's now becoming more of a meaningful part of the business because the actual car sales part is declining, and then Megapack and energy storage is increasing. And those are areas where Tesla has better prospects compared to the vehicles, at least in the near term. So Tesla saying that they continue to expand their AI training capacity in the first quarter, more than doubling our training compute sequentially. They've really doubled down on this AI and training the driverless car technology. They've seen this as critical for the company and its future because they've noticed that the growth in sales of electric vehicles has slowed down. They've realized it's going to be challenging to expand the growth rate unless they have some other reason for people to buy these cars. And one of the reasons could be is that they can develop driverless cars. If you can have a car that's completely driverless, that I can sit in the back seat and take a nap while it takes me to work, or take a nap while I drive to some location, that increases the value of the vehicle. That increases my interest to purchase. Although they're far from that they're getting closer, and that's what's impacting the price of Tesla stock, is that they've been able to convince investors to value Tesla stock like a tech company, like an AI company, more so than a car company, even though the vast majority of its revenue, its cash flow, its profitability come from cars. They've been able to convince investors to pay for it as if it's already achieved this driverless car technology, as if it's already an AI company, which in my opinion is a little bit ahead of schedule. It's a little bit getting ahead of yourself if you're looking at Tesla stock in that way. But Tesla works hard, including in this conference call. There are several mentions and several hints and several downright proclamations that if you don't value Tesla like a tech company, then you are wrong. You don't know what you're doing. Just straight out saying that from Tesla, telling investors this is how you should value us. And some investors have become convinced of that fact, and they're paying up for Tesla stock with the higher valuation. So Tesla also saying that their updated future vehicle lineup will accelerate the launch of new models ahead previously mentioned start of production in the second half of 2025. So in a rare surprise, Tesla actually, well, I shouldn't say a rare surprise because they haven't actually done it yet, but they're moving up forecast. They said that they would do this by the second half of 2025. Now they're saying early 2025, maybe later this year. So these more affordable models will use the aspects of next gen platform as well as aspects of current gen platform, and they'll be able to produce this in the same manufacturing line. Now, what I think investors should take close attention to here, this is not likely to be that long promised $25,000 model. This is not likely to be that. This is likely to be a lower priced model, but unlikely to be $25,000 model. I think they're going to blend these approaches and be able to produce a lower priced model. Instead of taking more time to try and get closer to the 25,000 mark, they're just going to produce a lower priced model. Even if it's 35,000 or 32,000, they're going to want to do that sooner rather than taking more time to try and hit the 25,000 mark, because they don't feel that 25,000 mark achievable in the near term or in the timeline that they were forecasting. So they're saying, let's do this instead, and we'll be almost there, not quite there, almost there. Still, it'll have a positive effect in that the lower price will make the product more affordable and more reachable, attainable for more customers. So those two things really boosted Tesla's stock in the quarter. The forecast, the moving up of the forecast of lower priced models, and then almost forcing investors to look at Tesla like an AI company, telling them, and this happens a little bit later in the conference call, several times Elon Musk straight out says, if you're not looking at us like an AI company, then you don't know what you're doing. And so really telling investors, you have to look at us as an AI company, because if you look at us as a car company, we're way too expensive. And saying you shouldn't invest in us unless you believe in our AI future. So those two things really boosting Tesla's share price following the earnings release, despite the fact that sales were down, profits were down, cash flow was down. Everything that's happening right now is not good for Tesla, but they've been able to convince investors to look at this future where they're going to have lower priced models and they're going to have closer resemblance to full self-driving or driverless car technology. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.